Let's give you the markets update now. The JSE looking set to start to show a little optimism on global markets this morning, though risk sentiment remains fragile as the war in Ukraine continues and investors consider the chances of aggressive global central bank policy moves. Rella Suskin is head of research at Benguela Global Fund Managers, and she joins us now to talk us through the latest market developments. Rella, good morning to you. How is the JSE performing in early trade?
Morning. So we saw the JSE open up slightly positive this morning, very much in line with what we saw on the close of Asian markets. Although China is on holiday today, so trading a bit thin in Asian markets. The rand slightly stronger, continuing to follow sort of the stronger commodity prices that we're seeing. And it's really the gold stocks and the coal or energy stocks on our market that is pushing the JSE higher. As you mentioned in your introduction, it's very much following the possibility of further sanctions against Russia, particularly by the European countries. Over the weekend, we saw a lot more but bad news coming out of Russia and Ukraine. The accusations of further war crimes, and so possible sanctions to follow. And so we see coal prices reaching higher as a result.
Yeah, well, amid the bad news, Rella, some good news here in South Africa. Moodys Investor Services upgrading its outlook on South Africa's credit rating. And as I say, these are good news indeed. But what are some of the issues that the country needs to do in order to get a complete upgrade from the ratings agencies?
Yeah, so certainly a bit of good news for us. So we're still sitting at a rating of Baa2, so we still are in junk status, but as you mentioned, our outlook has been upgraded to stable from negative by Moodys. Two of the driving forces behind that upgrade in outlook is that Moodys is saying that our debt to GDP ratio looks to be settling at about 80% over the medium term, or around 75% by 2025, which is better than they originally expected. And secondly, our primary deficit has come in better than forecast at 1.3% of GDP versus the previous forecast of 3.4%. But I mean, in terms of looking forward and really getting an upgrade out of the junk status, the continued concerns around our SOEs comes up and how that continues to sort of weigh on our debt to GDP metrics. Also structural issues such as our high unemployment rate. That's really changes need to be seen there in order to get the economy going.
Yeah, let's talk company news. Transnet announcing details about its plans to subsidize its rail sharing networks at its peril. Talk us through some of these plans and what they mean for the railway lines here in South Africa.
Yeah, so they're looking to open up capacity of their railway lines to private companies. It's been talked about for quite a while, with Transnet sort of increasing its public-private partnerships to try and improve the efficiency of our rail network and have some of the traffic, cargo traffic, taken off our roads and onto rail. I think the one concern around Transnet is that selling these slots to private companies won't necessarily improve the profitability of Transnet, as they're selling it at highly subsidized rates. Transnet itself says that it's uneconomical for them to sell it to private companies at the full cost. It would really cost them to maintain the infrastructure, as it wouldn't make economic sense for private companies to do so. So the subsidization of these slots, while it will improve capacity and improve the movement of cargo around the country, it's not necessarily adding sufficiently to Transnet's income statement.
Let's conclude the conversation with PSG Consult publishing its trading statement ahead of its financial results. How do their numbers look?
Sure, yeah. So, they're publishing their year-end results ending February. It was a very short statement, really just saying that their recurring headline earnings per share will be up between 31% and 33% year on year, which is a solid result. There's really three parts to the PSG Consult business. It's the wealth business, there's asset management and insurance. One of the main drivers for the improvement in results would be the asset management business, which up until February would have continued to benefit from improving equity markets. Before, to the end of February, it would have been pre the sort of Russia-Ukraine war, and so they would have had sort of the full benefits of those market rises, driving that result higher.
Rella Suskin, thank you very much for that markets update. She is head of research at Benguela Global Fund.